Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. We've all had I guess, guys, a restful weekend. Cheering for football, FIFA.
A hectic weekend. Sports was on everyone's mind, right, over the weekend.
Top of mind, right, Nigel?
Well, that's right. No, it didn't really. Yeah, Netherlands didn't make it through. Morocco made it through, but I'm gunning for them now.
This time for Africa.
This time's for Africa, like Shakira
And those
said.
videos were so sweet, right? About the Morocco team cheering with their families.
So
I mean,
true.
it was. It is the World Cup has been about the underdogs this time around, and I think taken it through the finish line.
And I guess Tuesday and Wednesday is going to be busy as well, right? With semi-finals and so.
Who are you going with?
A very busy one. Now I think it's going to be maybe France again, right? I think. I mean, the way they're playing, attack, defense, everything, I think it could be France.
It could be France. They have the team in there. I'm going with Morocco, as well as I believe that it's Messi's time. So maybe. Let's see how that works out. Let's get to markets.
All right, let's quickly tell you how things are set up before we go any further. Let me start with the US, right? Because that's basically where the big Q is going to come from. So this week, you've got two things to watch out for. You've got CPI, which is, of course, the day of the first semi-final, a FIFA semi-final, and the second is the FOMC with the day of the second FIFA semi-final. So you got the CPI data on the 13th and the Fed decision on the 14th, which is one day later. Now, why is this important? I think more than even FOMC decisions, the reaction of markets to FOMC lasts a day, 2 days, sometimes it reverses, but CPI usually is more pivotal. A stronger CPI could lead to a more stringent sounding Fed chair. A weaker CPI as compared to expectations could lead to a more benign sounding Fed chair, that is Jerome Powell. And I think that is where that's why this is important. A rate hike is very much given. I mean, a 35 basis point rate hike. So that's not what we are debating about. It's basically about commentary which the market will watch very, very carefully. By the way, I mean, if the producer price index, which the data we got on Friday is anything to go by, expect higher, not lower. But that is producer prices. We're looking at consumer prices, which is up next. A quick word on levels. I mean, this morning, SGX is indicating a lower start. And I think we will once again breach the 20-day. We are, by the way, exactly at the 20-day as of Friday's close, which is now moved up to about 18,496. And I think if that goes, and I think I put this level out last Thursday and Friday as well, the next level to watch, the really big one, is 18,133. I mean, actually, that is a medium-term kind of a level. That is nothing but the November lows. So 18,133 is the next one to watch, if 18,496. I mean, the market is not able to close around these 20-day moving average kind of levels. Closing is important. You may breach it like what we saw on Friday and then pull back like what we saw on Friday, but a meaningfully lower close below that average, I think, is what will count. The Bank Nifty is much stronger. I mean, actually, if anything, the Bank Nifty ended higher, right? Marginally, but it did end higher. On the Bank Nifty, if there is pressure on the downside, the level to watch is the low of 42,948, which is, I mean, the low of the last 3 or 4 days. So that's the first one to watch on the downside. Let's just do a quick word. The PSU Bank Index pulled back last Friday, and it did so on very high volumes. So that's a space that you want to watch. There is an upgrade, for Punjab National Bank. We'll come to that in a bit. But the index was down 1.7. Is it routine profit booking? Looks like it, but volumes for the PSU Bank space were the highest since February of 2021. And, when volumes spike like this and prices pull back after such a large move up, I mean, I think you need to be a little watchful. The real question is, where will support, leadership, etc. come from? Because IT, maybe not exactly after what HCL Tech did. Perhaps it is banks, private, if not public. But I think that is the stronger part of the market very, very clearly. SGX right now indicating about a 70-75 point lower start. Guys, hi.
Absolutely. And, this is an important week, right?
Yeah.
We head into the week with the US Fed meet, as you said. Perhaps the Fed is going to guide the markets this week. And ahead of that, there is some bit of tentativeness. It was a weak handover from Wall Street as well. The Dow is down over 300 points. The SGX is down about 70 points. Apart from the US Fed meet, there are two other central banks that meet as well. So there could be rate hikes across the board. There's the ECB meet on December 15. There's the Bank of England meet. And from the ECB's front as well, there's a 50 basis points rate hike expected. There's the US CPI data. So it's going to be data galore. And that perhaps is going to decide the trajectory of the market going forward. Now, the Nifty up until now has been range bound between 18,400 to 18,800. And on Friday, once again, we saw selling from FIs, although it was a very, very small amount. The flows have thinned down as they generally do towards the end of the year. Now, a couple of things. Our own markets have been pretty resilient amidst all of this global chaos. So, Credit Suisse came out with a note on Friday evening where they spoke about how there is a big sign of revival in the low-income consumption in India. And that perhaps could take the lower end of the market, with some recovery. They speak about how the services economy is normalizing, the government bottlenecks in spending are easing, and there is perhaps a potential 15% gain in forward earnings is what they talk about. Of course, there are a whole host of sectors as well, which we will discuss later. But given all of the global headwinds, I think the Indian markets are, a bit of an oasis maybe for global investors. Things have been looking good, although today we may start on the back foot, but then we'll take it from there.
Well, that's right, Sonia. In Friday's trading session, when we got into the final hour, you were hoping that we defend that 18,400 odd mark on a closing basis, and that's what happened because we ended closer around the 20 DMA. We pulled back in the final hour of trade, and the Nifty Bank, that was rock solid in Friday's trading session. Though the IT index has become a bit of a worry, was down close to 6% for the week itself. The problem on Friday was not the headline index, but the mid-cap and small-cap indices as well. They took a harder knock. The small-cap index was down 1.1%. The cues coming in from the F&O market, though, I would view them a little bit positively because we were getting very exuberant on the long side. The put-call ratio has cooled off to around 0.76. It was at around 1.04. Earlier, it was 1.3, 1.4 as well, so I like that. And the premium on the Nifty futures as well was 130, 140. Now, that's come down to around 87 odd. I think that's pretty good. There is some unwinding of long positions and some kind of, this is a more believable screen actually. The FIs in the index futures, they unbound longs. More than 6,000 contracts is what they unbound, and they added some shorts. And now the long-short ratio is at around 58% of their positions are on the long side. But the net long positioning, we've been talking about this, right? It was 90,000 at the start of the series. That came down to around 55,000 at the start of last week. And it ended the week at around 26,000 odd. So the net long positioning has come down drastically, which means the short positioning as well has got up, which is not such a bad thing. Moving to the option side of things, well, the FIs, they wrote calls aggressively. 2.3 lakh calls were written in the ratio of 3 calls for every 1 put. And it appears in Friday's trading session, the 18,600, 18,700 call, both of them very active. Between them, they added more than 1 crore shares. And there was aggressive writing seen out there. So the bears, they're going to come in and defend the higher levels. However, on the downside, the 18,400 put as well was fairly active, which brings us to the levels. Now, on the downside, you're looking at Friday's low. You're looking at the 20 DMA. Once we get up and above that level, substantially, then you'll be feeling good. So that becomes a bit of a resistance zone. On the downside, Friday's low. And since 18,400 put was seeing some bit of writing, you're counting on that 18,350 level holding out. So that becomes the buy zone, 18,350 to around 18,400 odd. Risk reward could favor the bulls. The Nifty Bank could pull back 1%, but still that's the strongest index because the 20 DMA is quite deep from here. And the breadth of the market, I like to see more participation. For starters, the SGX Nifty is suggesting a bit of a pullback. Risk reward will favor you closer around the 18,400 odd. What else, Sonia?
Absolutely. That's been the benchmark, so to speak, on the downside, right? The support level for the market, the 20 DMA of 18,400 to 18,500. This is something that's held for the last many days as well. A couple of things to watch out for. You have 3 IPOs that are kicking off this week. So there's a total of almost 1,900 crores that will be raised from the primary markets this week. Today, of course, we all know Sula Vineyards, the IPO opens up. The one I'm looking forward to is Landmark Cars tomorrow. It's Group Landmark, which we all know as a common brand. It's a TPG-backed premium auto dealership that launches tomorrow. So keep an eye out on Landmark Cars. And there's also Aban Holdings that will be launching its IPO this week. So lots of action on the primary market front as well that we'll be tracking. But first up, the SGX Nifty indicates that the opening will be on the weaker side and all eyes will be on the US Fed meeting later this week. So maybe some tentative moves ahead of that. On the equities front, though, we have a comment coming in from Neelkanth Mishra of Credit Suisse, who says that the level of economic activity is now closer to the pre-pandemic path and the pace of growth is stronger than captured in data. He says a revival in government spending, low-income jobs and easing of supply bottlenecks should partly offset the effect of rate hikes, sharply slowing global economy. He also says a potential 15% gain in forward earnings may set the ceiling for returns over CY23. They prefer domestic cyclicals like financials, cement, construction and staples over discretionary, and they are underweight industrials, IT and metals.
Well, let's get you some money market views as well. B. Prasanna of ICICI Bank says that after recent correction led by expected softer inflation trajectory, dollar has consolidated in a range. He says, though the FOMC is expected to slow down the pace of hikes, any surprise in US CPI data will increase volatility in currencies through repricing of terminal rate and pivot timing. Rupee, he says, which is seeing persistent pressure of dollar buying from the RBI, and oil companies will remain volatile and trade in a range of between 81.75 to 81.9 for the week.
And on the bonds, B. Prasanna says global yields remain range-bound awaiting FOMC outcome. Back home, he says the MPC delivered a hawkish 35 basis points hike, resulting in the repricing of the terminal rate expectations. Yields drifted higher with supply concerns coming back to the fore. He expects the market to remain on the edge ahead of the CPI releases both in India and the US, and expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.4% for the week.
Well, we have a lot of stock-specific action to track for you today, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Poonawalla FinCorp, Bharat Forge, Adani Total Gas, Apple, ISMT, PSP Projects, Dalmia Bharat, and Jai Prakash Associates. They are stocks on the back of positive news flow. On the flip side, we have Glenmark Pharma as well as Trident. They are stocks that could open up in the red.
Okay, Richard Harris is now joining us. He's Chief Executive at Port Shelter Investment Management. Richard, great to have you with us here. Thank you very much. You know, my first question is with regards to oil prices. Who would have thought, right, with all that is happening, there is positive impulse, isn't there? China is reopening faster than what anyone thought. There is the price cap on Russian oil. One would have thought that would sort of reduce the amount of Russian oil in the markets generally. And yet prices continue to drop. Because, I mean, of course, there is growth slowdown as well. But what's your sense? Are prices going to go down a lot more from here? Or as many are suggesting, you know, this only makes the setup for a bigger rebound more possible. What's your sense?
Well, I think the market has come off for a variety of reasons. The main one is probably the slowdown. And of course, the realization that China has slowed down a lot more, I think, than people actually thought. I'm not so sure the cap will have much effect. And in fact, it may have a detrimental effect. It may actually push prices up. But I do think that maybe we've seen prices come down a little bit fast, and that we're more likely to see a slight recovery from this stage. However, I think we've got to be realistic and say that despite what we're seeing from some of the economics around the world, things are slowing down. People are concerned about inflation. A lot of the negative implications about inflation haven't actually come through yet to the economies. So we're going to be waiting for that till next year.
Richard, hi, good morning. There's a US Fed meeting midweek. If the Fed goes ahead and hikes rates, which in all likelihood it will, and if it's a 50 basis points hike, how do you see equity markets react? And more importantly, markets back home, because that's the viewer that's watching you right now. What should the takeaway be?
Well, I think the thing about interest rates is that the Fed has been consistently wrong all the way through. And that's my concern with looking at the dot plots, you know, the predictions that a lot of the Fed chairmen have that people plot out, is that they've been wrong in the past, so why should they be right now? I think it's very likely that they will increase by 0.5 point. I think they have been surprised maybe at the fact that we have had a fairly strong economy along with fairly strong inflation. Is that a surprise? All the way through. Their announcements that they would maybe slow or maybe even go so far to pivot interest rates, I think were taken a bit too much by the market. Remember, they're looking at about a slowing going down to 50 basis points from 75 basis points, rather than having a peak in interest rate rises. And as far as I can see, all the indications are that interest rate rises in the US are going to continue. The Fed may be worried about putting it up too fast, which is why they're going to the 50 basis points. But I think we're likely to see 50 basis points being the standard for some more meetings.
All right. Hi, Richard. Good morning. What about the Indian markets? You know, we have been the big outperformers of 2022. The problem is now we're getting a little bit more expensive, and there could be a tactical play on China. Your outlook on the Indian markets from here on, would you allocate more money?
Well, you guys are much more expert than I am about India. I think, obviously, at the moment, China has had a big fallback. and the allocation of emerging market money probably will go more towards China. I think the thing about China is that we haven't really seen the figures that we might have expected from an economy that's been locked down for so long. Remember that we had some substantial falls in GDP growth on a quarterly basis during COVID, during the COVID lockdowns in Europe, in the UK, in the US. We haven't seen those necessarily come through in the figures in China, except for a little bit of a hint that we've had last time round. So I think we have had a very big hit in China, but we will also likely see the kind of recovery that we've seen in other parts of the world when the COVID restrictions come off. It does look as if, should we say, unofficially, officially, the restrictions are starting to come off. And I think that that will be positive for China. That'll probably take a little bit of the wind out of the sails from, say, the Indian markets. But I wouldn't necessarily be too concerned because I think the emerging markets are going to very much mirror what's happening in the developed markets.
Not India, Richard. That's the point, right? I mean, it's just if 22 has shown that the market here is absolutely Teflon coated, and nothing. You've thrown everything at it, but the market is it's the best performing large market in the world, right? By far, the Indian market, Richard.
Well, the Indian market's a very fine market. I mean, we sometimes think of it as an emerging market, but it's almost as old as almost any other market in the world. If you take out the UK and maybe the US, it's a significant market with a significant domestic content. Very often it is going to follow its own tune. It's nice to have investors come in as a marginal buyer, but it is going to follow its own tune. And I think that India probably needs to be looked at not as an emerging market, but as a market separate into itself, as you might look at Germany or as you might look at Japan or something like that, because I sometimes think we forget quite how mature the market is.
The one trade that has played out in India is go short on IT and long on banks. I don't know whether you're following that as much, but do you think that's going to be the trade of 2023 as well?
That sounds like a trade. It doesn't sound like a trend. Obviously, the IT has been affected because it's going to be more impacted by global slowdown. But equally so, if you're looking at a more extended period of global slowdown, a more extended period of inflation, you really kind of have to stick with the companies that are going to lead us out of that. And it's difficult really to see that the banks are anything more than a trade, maybe a 3-month trade or something, but still a trade. But I think if you're looking at an industrial sector, which of course IT is, and it's the darling of the industrial sectors at the moment and has been for, a decade or so, I think you still want to be careful that you're not too underweight in that sector.
All right, Richard, we'll leave it at that. Thanks for a quick take on the market. So the FOMC meeting starts tomorrow and there's a 50 basis points rate hike expected. But Indian markets are something that will continue to be resilient. Let's do one thing. Let's take a quick break. Our list of top 10 stocks is lined up in just minutes from now. Stay tuned. Welcome back. Well, we begin the day with some negative cues. The SGX Nifty is indicating a weak start. But let's see, perhaps it's just wait and watch mode ahead of the US Fed meeting as well. Let's talk about individual stocks. Poonawalla FinCorp is the one that we're looking at first up. Nimesh is here to tell us more. Nimesh, over to you.
Hi, Sana. Morning. So it was part of my deal street chatter on Friday, and over the weekend there was an announcement that the board is going to meet on December 14, which is Wednesday, to consider a sale of their housing finance business. Now, that's a 100% subsidiary of listed Poonawalla Finance. In terms of business, this housing finance business has an AUM of close to 5,600 crores and had reported an NPA ratio of 0.53% versus 0.54% quarter on quarter. In terms of how much it contributes to the business, the AUM contributes 30% of the overall business, NII contributes 24%, and PAT contributes 20% to the overall business. So it's a significant business, the housing finance business, which is likely to be sold. My understanding is a leading private equity player is likely to buy out this company. So the valuation will be important, but I guess I'll go with the green for the fact that they're looking to sell the housing finance business on Wednesday.
All right, and as Nimesh said, we told you first, we at least hinted about it first. Thanks very much, Nimesh, for that. Now, Adani Total is the next one in focus. Sonal has got more on this one. Sonal, hi, morning.
Good morning, Prashant. Well, yes, the company is in focus because they have won a letter of award from Convergence Energy Services Limited, and this is for a segment in which the company is still venturing into. It is for supply, installation, testing, commissioning, operation and maintenance of electric vehicle charging stations, which will be done in few cities in the state of Gujarat, and this will be done via build, own, operate model for a period of 8 years. They've not given us the amount, but looks like since it is for a larger number of cities, it could be a big amount, and this turns out to be a positive news for the company.
Oh.
All right, thanks a lot for that, Sonal. Well, Sonia, the Bharat Forge had an analyst meet and they're talking up the market. They've given a very strong guidance.
They have. And you know, the stock has been in focus ever since the company said that finally, after 10 years of incubating the defense business, finally they're getting some orders. So that's the reason the stock has had that big rally in the last 2 weeks. But here are the details of the analyst meet. They're looking to grow beyond their core business, which is auto ancillaries. The focus is now on new businesses, whether it's electric vehicle components, defense, as well as aerospace. They're targeting a 12 to 15% consolidated revenue compounded growth. They've called it their Vision 2030 strategy. So this is on the revenue side. EBITDA margins, the target is more than 20%. And they're targeting a return on capital employed ROCE of 25% versus 20% currently. Now to the juicy part, which is the defense business. They're saying that the wait is perhaps over in defense. They've incubated defense 10 years ago and now will start yielding results, which is next year. They've secured a substantial order worth $155 million for export of guns, and the delivery will begin from April of next year. They will make 6 guns per month by October of 2023 and 12 by end of FY24. They've also secured orders to supply KM4 armed vehicles to both the Indian Army as well as to the UN. And also in the electric vehicle component space, they will have 3 plants in EV components starting from Q1 of CY23. So it's important because, you know, now from being a pure play ancillary player, they are now spreading their wings. But it's important to see what happens with the margins. Do they get diluted? What happens with, their defense business? Because it's a very high capex business and now finally yielding results.
Playing offense and defense, I had to say it. Gives itself to wordplay there. But it's an interesting story. We'll keep track of it. Dalmia Bharat and Jayaprakash Associates are in focus. Vivek is standing by with more on this one. Vivek, hi.
Well, good morning. It does appear as though a significant deal is brewing as far as the entire cement pack is concerned. So a couple of stocks will be on the radar. Number one would be, the JP Associates twins, so JP Associates as well as JP Power Ventures, as well as Dalmia Bharat. So JP Associates, they've given an update to the exchanges. This is in continuation to an earlier update where they had given and they had indicated that they are looking to divest their cement assets. So board meeting is held today, and this is mainly to discuss progress on various divestment initiatives. JP Power Ventures has said the same thing, and this is for divestment of the JP Nigri cement grinding unit. Now, coincidentally, on the same day, Dalmia Bharat has also put out an exchange notification saying that in account of an anticipated event that is expected in Dalmia Cement, they have also gone ahead and closed the trading window for the insiders. What we are basically looking at is earlier reports had also indicated that for a slightly northwards capacity of a little over 10 million tons per annum, reports had indicated that players were willing to bid close to 5,000 crore. So it's a sizable deal. Maybe it's anticipated that this particular deal could be announced in today's trading session itself.
Okay, all right. Thanks a lot for that, Vivek. We'll keep an eye out on both those 2 stocks. Vahista is with us to tell us about some other stocks in news. Morning, Vahista.
Hi, good morning, Nigel. Let me start with Affle India, wherein there's going to be a board meeting which is going to be held on the coming Wednesday, which is 14th of December. This is to consider the proposal for issuance of some securities. And the purpose of issuance of such securities is a likely inorganic growth that the company is looking forward to. Let me move on to Glenmark Pharma, wherein the US FDA has released warning letter details for the inspection that was conducted this year from 12th to 20th of May at the Goa facility, wherein this failed to thoroughly investigate any unexplained discrepancy. There was no inadequate procedures for production and process control. There was a failure to establish and follow required lab control mechanisms and failed to prepare batch production and control records with complete information. Moving on to ISMT, which has entered into a business transfer agreement for the sale of 40 megawatt captive power plant of the company on a slump sale basis, and the buyer is Om Sairam Steels and Alloys Private Limited, and the consideration that ISMT is going to be receiving is 66 crores, so some positive news over there. PSP Projects has received a letter of intent for civil construction and the amount is 122 crores. From Neela Spaces Limited, the last stock is Trident Limited, wherein the production numbers for the month of November is out and they look weak on a year-on-year basis. Bath linen segment production was down 8%, bed linen was down 35%, yarn was down 24%, paper segment production was down 7%, only chemical segment production was up by 3%. Back to you.
All right, thanks a lot for that. So lots of stocks in action, and here's a quick recap in case you missed out on any of them. Stocks with positive news flow: there's Poonawalla Fincorp, Bharat Forge, Adani Total Gas, Affle, ISMT, PSP Projects, Dalmia Bharat and Jaiprakash Associates. While stocks with negative news flow, there's Glenmark Pharma and Trident. All right, let's take a quick break on that note. But on the other side of the break, Prakash Diwan will join in for some fundamental stock analysis. We'll also connect with Ashank Desai of Mastech to discuss their fundraising plans. Stay tuned.
Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, good time to get in, Prakash Diwan, and discuss all the stocks that we just presented for you. Morning, Prakash. Thanks so much for joining in. Well, Prakash, you would have heard what Sonia had to say. Bharat Forge, they had an analyst meet. They're guiding for a good growth, in terms of revenue, mid-teens for the next few years, margins improving as well as ROC improving. The kicker is going to come because that defense business is finally going to start reflecting in terms of revenues. What's your view on the stock at these levels?
Good morning, Nigel. So I do echo the buoyant outlook that's kind of coming through for the simple reason that all these years we'd seen the company struggle a lot with in terms of the formative stage that it was on the new vertical of defense. But what's happening is this whole Atmanirbhar, focus on defense particularly is kind of developed that ecosystem very rapidly, to the extent that even the quality controls that you have in some of the products that Indian companies are making is become much more sharper, stringent, and rapid in terms of outcomes. And that's exactly one of the reasons why the sales cycle for some of these companies which are looking at exporting is become very strong. So first we started with the domestic requirement, the import substitution bit, but then there's this element of export ability which is getting to be very strong. Bharat Forge has experience in global markets on the ancillary business. All it needs to do is replicate this in its complex defense vertical. Remember, the meet very clearly, the highlights of the meet were simple, that they've decided to focus on defense under a brand, which is the Kalyani brand, and try to kind of, position it in a way which is very distinct and get into complex products on the value chain. So it's not just simple stuff that they're doing. So this will take time. It's a lot of promise that's there. And by the time the guns start getting into usage and the input starts coming back in terms of what needs to be done to scale up, it'll probably be end of next year, next calendar year. So till then, of course, it's going to be, up and down for the stock depending on other businesses and other news flow. But I think it's a great portfolio pick once the defense vertical matures. So keep a watch. Don't be in a hurry to just buy into it because of what it's promised. But what it tells you is that the stock is no more going to be valued on the lines of on the auto ancillary business that it has all these years been facing. So it's moving into a next orbit. Be ready for that.
Okay, and you can see it move into the next orbit on the stock as well, right? I mean, the stock has been range bound for the last, I think, a year or so, and now suddenly taken off. But let me draw your attention also to what's happening in the banking space, because there are several upgrades that have come in over the last many days. And this morning, Punjab National Bank could be in focus because JP Morgan has upgraded to an overweight. Prakash, I want your thoughts here because the target price has been raised to 72 from 34. Do you think it's a little late in the day for an upgrade on PSU banks? And what do you do with these names now?
Good morning, Sonia. So, the PSU banks are going to go through a very classical cycle of growth, cleanup, growth, hyper growth, and then again, NPA creation at some point. So it's going to be that. Right now, I think if you look at some of them being off the blocks much earlier, like a Bank of Baroda or a Canara Bank, and that's what's being captured in the ROAs, which we've started seeing inch towards that 15%. Rubicon, in some of these cases like Canara and all. But the rest of the banks were too late to, play into this cleanup, cycle. And because of that lag, you'll probably see the likes of PNB and all, even Central Bank or Bank of India start moving into that zone very soon. So I think what this report tells you is that there's still some time left in PNB to see that upside happen. It's not yet moving, but this target seems to be a bit too optimistic according to me, because PNB's not yet had this demonstration effect in terms of what they can do when things start moving better for them, because they've stumbled into these kind of situations earlier as well, when everything's good for the sector, but then they've had their own self goals of sorts. But importantly, what's going to happen is, if you select a bigger bank which is still beleaguered or getting out of the woods, you'll probably make more money than you do in an SBI. That's what's coming through. So yeah, I mean, you could still make some money, though. It's already moved up 50% in the last 6 months. But there could be still another 40% left to take off. But that's a very different risk reward that you would have to evaluate. But I would recommend buying into it at this point in time, personally.
All right. The left out feeling, FOMO feeling, is not just traders feel it, right? Analysts feel it as well. Analysts and portfolio managers, very, very real. Well put, Prakash. Thanks for joining us as always. The one space which cracked big time is IT services after that HCL Tech sort of commentary, right? Big cut. I mean, the index itself was down 3%. Very large bar. What are your thoughts here?
Prashant, I think IT, we saw this whole numbers coming through in Q2, which were not as disappointing as what we were anticipating when the earnings season took off. For the simple reason that there's been veritably no change in contracts from most clients. But the key element of this thing is going to be the moment of reckoning is going to be when the new year starts. Whether some of these non-discretionary accounts are actually going to be improved on, or in terms of quantum, whether there's some sort of a scale up. If that happens, then some of these companies do tend to again kind of start seeing some revenue visibility. But and mind you, Q3 is going to be even more misleading, because typically it's a lean quarter, and this time around you had very low attrition, so wage cost has been low. But some of these contracts keep on getting over closer to December, which means there's a little bit of a lumpiness in revenue as well. So Q3 numbers will also be decent. But I think I would wait for contract renewals to be an indication or a trend to be set there, and then look at getting into IT. But till then, IT will probably be sideways, if not downward. Downside, this thing reactions into the stock prices. But I don't think there's any upside immediately for the time being. I mean, till mid-Jan, probably end Jan, you'll probably not see any kind of a spark coming back. So it's good to book profits if you're a trader, but on a long-term basis, I think it'll pay off once you listen to the commentary coming through in Jan in terms of new contracts.
Okay, it's important. We will, of course, get you a slew of IT names to tell us whether it's just restricted to HCL Tech, the kind of pressure that they're seeing, or is it across the industry? So that happens in moments from now. But in the meantime, let's listen to an exclusive chat my colleague Ritu Singh had with the non-executive chairman of Infosys, Nandan Nilekani, who spoke on a whole host of topics, including what's happening with client spends. Take a look.
Well, I think, while the global economic environment does have signs of slowing down, I think technology and the role of technology in businesses has never been higher. I think the pandemic showed us that you have to be digitally well equipped. So I do believe that there's still going to be continued interest in IT, both for transformation as well as increasingly for automation and cost reduction.
Let me go ahead and ask you, you said that UPI is going to be the WhatsApp moment of India. What next now? We have the ONDC, we have the, AA, we have, a lot of other digital initiatives that are coming into play, the CBDC and so on. What do you think is going to be our next big moment?
Well, I think we are at a very interesting point. In the first part of this transformation, we had digital identity with Aadhaar, we had DBT for everybody, we had UPI to transform payments and so on. In the next phase, I think there are going to be three big things. The first is democratized credit. Everybody will get access to credit, and the account aggregator system, which has been launched, is gathering steam. Recently, GSTN was added to it. So once you make credit accessible to all, then millions of small businesses and millions of consumers will get access. That will be a big push to economic growth in an equitable manner. The second is ONDC will disaggregate commerce and make it much more inclusive, will allow more suppliers on the platform, more retailers on the platform, more consumers on the platform. So anybody can buy from anybody and so on. A third thing I think is the logistic revolution which is happening in India, partly with physical infrastructure, partly with GST reforms, partly with startups. So once you improve the ability to sell, how you sell, whom you sell to, how it's delivered, and give credit to companies to grow, that's the perfect situation that you want to be in.
Okay, well, you can watch this interview, Nandan Nilekani, the non-executive chairman of Infosys, all day today. And of course, it assumes importance considering what happened with HCL Tech last week. The entire IT sector has been under pressure. So in that context, will there be more pressure for, some of these IT names going forward? That's the question that we're asking. Let's slip into a quick break. On the other side, we'll have our technical guests joining in, Mitesh Thakkar and Sudarshan Sukhani, for some stock analysis. Stay tuned.
Okay, welcome back. We've got the management of Mastek now joining us. The Mastek board has approved raising of around 59 crores via private placement at 1851 rupees per share. Ashank Desai is Vice Chairman and Managing Director at Mastek, and he's joining us right now to take some questions. Mr. Desai, good to have you with us here. Thank you very much. Before we get to the private placement bid, just a quick word, if you can tell us, we heard from the HCL Tech management speaking with investors, analysts in the US on Friday, basically, first signs from managements are large IT companies emerging that the slowdown is starting to hit them. There are project delays, etc., which are starting to come through. Stock markets took note, and the entire sector was down quite a bit. Just wanted to understand: are you also seeing, this slowdown percolate through?
So what's happening really is the corporate budgets are getting repurposed. When I mean repurposed, it means that there are some things that are going to happen in the economy as projected at the end of the year. There may be more focus on cost saving, which is good for us because there will be more offshore. So all that repurposing of the budgets is leading into delay in the decision making. So as we see it, we do not see any impact on the budgets as such, but we do see a delay in decision making. So the whole issue now is how do we do account mining with our existing accounts so that wherever we are already in, we can grow. And that's what we are doing. The new account acquisition could have delays happening because of the repurposing that I'm talking about.
Okay. This is important because it may also sort of change your numbers for the full year as well, right? What you're expecting to do in terms of growth, both for FY23 and FY24. So that's the first question. And HCL Tech had spoken about higher than expected furloughs in Q3 as well. Are you noticing that too?
Yeah, that is true that there are furloughs this quarter with holidays and lower working days. That pressure is there in this quarter, and that will remain. And yeah, that I do feel is an issue. In terms of overall guidance, as you know, we do not give any quarterly or annual guidance. So we do feel that we need to work on some of these issues because some part of the business particularly are doing quite well. Like, for example, the Salesforce business that we acquired is doing very well. In fact, we are even exceeding what we thought we could do in healthcare, local government. So there are pockets in the markets where there is an investment going on even as we speak.
So,
There are pockets where there is a delay. So it really depends on what sector you are in.
Sure. Mr. Desai, you may not want to give us a guidance, but you have a target of achieving $1 billion of revenues by FY26. You think that would be a tall ask, given what you just told us about some delays in decision making?
The 1 billion number is really an aspirational number rather than saying target. And we are, of course, would like to continue to work using that force and that bigger and repurpose strategy and so on. But we are looking at 1 billion as not a number which is kind of a target setting or a guidance, but more as an aspiration that we want to become and reach there as soon as we can. So I will leave it at that rather than saying a specific date and so on.
All right. Morning, Mr. Desai. So you're saying it's an aspirational target as of now, and you're headed in that direction, but it's not a fixed target. We get that point. You've also raised, there's an announcement that's come earlier today that you'll have raised closer on 60 crores odd via private placement. Give us some more details. What will this money be used for? And I can see a whole host of, individuals' names out there. Who are these investors?
Oh, so this is a part of the Evosys acquisition that we did 2 years ago. As a part of that acquisition, we were supposed to get 70% equity in the beginning, and remaining 30% was to be getting 10% every year. So this is the second year of that 70%, 30% buying, getting the shares. So we issue the fresh shares. Now, when we pay for the 10%, we pay some in cash, some in Mastech stock. So what we are doing now is this second tranche of that three tranches of getting 10% stake in the Evosys part of that business, which we will do some cash and some stock of Mastech. So all that we have done that is to make that happen.
Okay, just one final question from my end. You said some of the new account acquisitions could be delayed. Have you seen any deal cancellations at your end?
So far, we have not seen any deal cancellations as such. There has been a delay. There has been a saying that we will take more time. That's where we are coming from.
All right. Thank you very much. Appreciate you joining in, and good getting that perspective from you, sir. And we'll catch up with you again later. Thanks indeed. Well, so that's the management of Mastech. Prakash, of course, is still with us. There's 12 minutes to go for the pre-open session. Prakash, another stock which, of course, saw a great deal of discussion, debate was Paytm, right? Which, by the way, ended about almost 6-7% higher. There are two bits of news. There are three actually. There is the business update, which shows that loan dispersal momentum is pretty strong. This is the monthly update. Second, we also put it out late on Friday that the company will not use IPO proceeds for this buyback. And of course, the meeting for the buyback is later this week. Any thoughts for Paytm from here?
So, I'll go to the second point first because that's a bit intriguing. If they're not going to be using IPO proceeds for buyback, how does that happen? That's a question mark that we really don't know much about. So we'll have to wait for the outcome of this so-called meeting to explain that. The second thing on the numbers that came through, which looks so fantastic on a YOY basis, because last year the base effect is so paltry that you will see it in percentage terms grow up. And what's going to change? What's going to change dramatically? And that was a very small sliver of that mentioned in Mr. Nandan Nilekani's interview with Ritu, where he's talking about the GSTN also getting into this aggregators, database to be accessed by any fintech that wants to. Now, when that happens, probably the likes of Paytm may not just have an edge. You'll have suddenly a lot of these fintechs which will mushroom to compete with us. So the disruption in that, small credit space through fintechs is bound to happen, Prashant. So I don't think they have some USP which, except for the fact that they have a huge user base on the money transfer business. But I think there are lots of possibilities on disruption. So I don't think there's anything dramatic that could happen to improve things till at least middle of next year. That's when the time of reckoning will be. So stay away. If you have Paytm and if you're still stuck with it, probably you might get an exit in all these exuberance.
All right. Just stay on. We'll come back to you in a bit. Let's get a quick call in on how to approach the markets now, considering it's going to be a weak start. Sudarshan Sukhani and Mitesh Thakkar are with us. Gentlemen, morning to both of you. Sudarshan, it's the start of a brand new week. There's a big event midweek, which is the US Fed meeting. How do you approach it? Do you wait and watch? Do you go a bit easy, no long positions? And given that we're going to start with the gap down, how do you approach it then?
Yeah, good morning, Sonia. See, we are in some kind of a correction now, and that's for the Nifty. So in a correction, it's not a wise idea to rush into and buy. So the trade is still to go long. This is not, the trade is not to go short anywhere, but we have to time the long positions carefully and not rush into it. So I would suggest that the markets should be allowed to drift down And if we have a sharp dip, approximately say 100 points from the open, that's the point at which we can take a chance, go long, and keep a 100-point stop loss. If that dip doesn't come, we miss the trade, and that's fine with me. So that's the view on the Nifty. Wait for a sharp dip. If it comes, put a 100-point stop loss and go long, at least for the and then see where it goes. The Bank Nifty is a different story altogether. It's been outperforming, and I think that with a 250-point stop, the Bank Nifty can be bought with a very minor dip also.
Okay, all right. Noted that, Sudarshan. So 100-point dip on the Nifty, the Bank Nifty 250-point dip. Got that. Morning, Mitesh. Let's get you as well in this conversation. What's your call on both the indices, the Nifty and the Nifty Bank?
Good morning, Nigel. I think the Nifty Bank is still looking healthy to me. The Nifty itself is a bit of a worry. The intraday chart, which is the hourly and the 2-hourly chart, suggests that we might not be out of this corrective movement. It's not a declining movement, it's a correction to the uptrend which has happened. So we're penciling in around 18,420 as the first support area, and then in the worst case scenario, 18,300. I would be more aggressive in buying in case we get to the second level. But otherwise, we'll wait and see if from 18,420 there's a sign of reversal, and then we can, possibly at least get into some kind of a bounce back. So for the time being, no hurry to take long positions on the Nifty. On the Bank Nifty, I would say around levels of 43,300 to about 43,000 is the support zone. So somewhere between that, if we see a reversal, I would be more happy to trade the Bank Nifty on the long side.
All right. What about individual stocks? What are we looking at this morning? Mitesh, let me begin with you.
So I have one banking name on the buy side, which is HDFC Bank. It's a conditional buy. It's just on the verge of breakout above the earlier hourly pivots of 1635.36. So buy about 1638, keep a stop at 1624. 1680 is the first target. That apart, Nestle is a buy with a stop at 19,950 for targets of 20,800. And on the sell side is Tata Power. Keep a stop at 223.5, look for targets of 210. And Havells is a sell as well with a stop at 1202 for targets of 1145.
And Sudarshan, how about you?
Well, Alchem is a buying opportunity. Alchem is now in a trading range, and the chances are that it could break on the upside. Buy with a stop under 3,000. Bata India is my only intraday short. The stock has been very weak and poor relative strength. It's an intraday short with a stop above 1,700. And my third stock is exactly what Mitesh has already talked about, HDFC Bank. The same story, a very narrow range for the last 1 month. It's on the verge of a significant, what I hope is a breakout. Buy with a stop under 1,590. And my fourth stock is Tata Chemicals. That's a buy on dips opportunity. Now, there is some risk there because there is no clarity that the breakout is coming on the upside. It's worth taking a chance with a stop under 1,010.
Okay, all right, gentlemen, thanks a lot for that. We'll come back to you all for the 9:10 call as well. For the time being, though, we'll slip into a short break. When you come back, we'll get you pre-opening. We'll also get with us Mr. Vijay Kumar of ACL Tech. He'll update us on the recent guidance pullback as well as how business is shaping up. Stay with us.